Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show, and I'm really excited to bring a new series that I'm starting today, which is what I'm calling my insights into drilling. As many of you know that watch my shows and read my reports, that drilling is what I focus on the most. It really is the lifeblood of mining, and that matters for major mining companies, developers, small miners that want to grow into bigger miners, explorers. It's all about the drill rig in the mining business, and that's what I've spent my life, 30 years of my life, over 30 years now, watching is drill results and drill programs and drill models and reasons for drilling and where they drill. And when it all comes down to it, it's really the lifeblood of the mining business. And so I also believe that we're coming into a very strong year for gold, silver, copper. And I see a lot of underappreciated projects and valuations that I think are going to be quite lucrative for investors. But to really get to the guts of that, I think that you need to understand drilling and what those results mean. It's not just about what a stock does after drill results are out as to how good they are. It comes down to looking into those drill results and taking a deeper dive. And not to worry, I'm not going to be talking in a whole lot of geospeak. As always, I try to take that complicated information and make it so that investors can understand what the drilling means. And really, to understand the value proposition of a company, there are two key things that I look for. One, I want to understand where a company is on the Lassonde curve. This was made by Pierre Lassonde on the back of a napkin, actually, and it sort of shows you the life cycle of a discovery that then gets developed and brought into a mine. And I think it's instructive to understand where a company's projects fall on that Lassonde curve, where they are on the Lassonde curve. I also think it's important to understand where a company is drilling into the system that creates the gold, silver, copper deposits. And so I'm going to show you some pictures of what I look for in those in the drill core, and so let's get on with it. I'm going to start with the Lassonde curve, and here I'm going to share the screen. And so this is the Lassonde curve, and so in the at the start of an exploration project, if you will, it starts out as a concept in a pre-discovery, and then you have the discovery phase, and this is often referred to as the left side of the Lassonde curve. Then, after an important discovery has been made, it can get into this orphan phase, which is where they're doing the feasibility, development, and then start up the mine. Now, all along this curve, I'm finding companies that I believe are undervalued relative to the quality of the projects that they have in these various different phases. And so I see some tremendous opportunity all along the Lassonde curve. And so as you can see here, the concept to just pre-discovery, and then you make a discovery and it starts climbing up the left side of that Lassonde curve. And sometimes companies are bought out during this left side of the Lassonde curve when they make important discoveries. Others, they advance them through to the orphan period or the development discount window when they're doing the economic evaluation and then developing it into a mine and starting up. But even in this area here, this is what you call the sweet spot of the development discount window. And it can have even a more as significant of a move, which is on the right side of the Lassonde curve, and then that discovery gets full value as it's in mining, and then gets depleted, and then there's a whole other side here where companies can then grow into mid tiers and then major mining companies. But I spend most of my time to the down here in the sweet spot of the development discount window, companies in the development discount window, and the bulk is in this left side of the Lassonde curve. So I'm going to now get off of this screen share and share my screen again because I want to bring up the first company. Like, these reports are going to be focused on individual companies only. And the reason that I chose McEwen Mining to be my first in this series of insights into drilling is because they have projects that are in all the key metals that I love, which are gold, copper, and silver. Plus, they have three styles of mineral gold or of systems, one for copper and two for gold. And so I also think that they're undervalued. So I'm going to talk about that. And let's get into, first of all, here's McEwen Mining's news release from December the 2nd, 2024. And in that, they said Grey Fox exploration update. Exploration has opened up new possibilities for resource and production growth. They had some great hits there, 10 grams, 11 grams, one over 11 meters, another over 5.8 meters. Now, they also talked about what kind of potential system this is. Well, they know it's an epithermal vein system. So let me first get to this map. So why I like this map is it shows you where their Black Fox orogenic gold mine is and their Froome mine. Now, both of these are nearing the end of their production. But what I wanted to focus on is there's a corridor here that they call the Black Fox Exploration Horizon. Here is the Destar Porcupine Fault, which is one of the major faults in the Abitibi Greenstone area. And a lot of high grade and a lot of gold mines have been found on this particular fault. Now, these are deep crustal faults that go down very, very deep. And these are important for orogenic gold systems. And the way to think about an orogenic gold system is that you need certain things. You need these deep cracks in the earth, these deep faults that go down very, very far for thousands of kilometers, or for thousands of meters into the crust. And these are the conduits that enable the gold bearing fluids from deep down to make their way up to the surface. And so these are the major crustal structures of faults, or cracks as I prefer them, cracks in the crust, that are needed for those gold bearing fluids to make their way up to the surface. A couple of great examples of this are, well, one in particular is the Goldcorp discovery in Red Lake, Ontario, that is what made Rob McEwen famous, whose name is on the door here with McEwen Mining. And what happened there was that there had been near surface production for about 20 years. And then they drilled deeper into this orogenic gold system, and they found what was called the Bonanza Zone. at about 1,000 meters of depth. Now, high in the system, they had, they had very high grades, but it wasn't as continued. There were continuity of that. So you had some here, some over there, some there, but it didn't really hang all together until they got down to that bonanza zone. At the bonanza zone, it was spectacular. They basically went from a 50,000 ounce producer to a 500,000 ounce producer. And while they were producing at those depths, they were one of the lowest cost producers in the business. So they had tremendous free cash flow. And under Rob's McEwen's tenure at leading the company, they grew from a really tiny, let's say $50 million valuation company up into the multi-billions. And so getting into that depth was really important. And sort of one of the ways that you can tell where you are in an orogenic gold system is the visible gold in that system. So very high in the system, you'll sort of find sporadic visible gold. As you get deeper, you start to see abundant fine grained visible gold. As you get deeper, it starts to turn into coarse grained visible gold, and then abundant coarse grained visible gold, and then the visible gold just goes off the charts. I remember going to the PDAC conference years ago, and I would always go to the Gold Corp's blue booth because they had these spectacular specimens of gold rock with tremendous visible gold in it. Sometimes it would look like half visible gold, very coarse, and half quartz. And so that's sort of how you tell where you are in an orogenic gold system. And so this Black Fox exploration horizon, on one side of it, it has the Destor Porcupine Fault structure, and on the other, it's called the A1 Fault. And so all of this rock in between the Black Fox mine, all the way down off of their property, is highly prospective for orogenic gold exploration. Now, down here where this Y is on the Gray Fox South, the Gray Fox South is actually an epithermal vein, but on this side over here is a orogenic gold discovery that I think has a lot of potential. There's a slide later, and it'll show you why I think this is highly prospective. But there's a couple other things you can learn from these deep cracks in the earth. Where you see bends in the rock, like in here, right here, uh, on this A1 fault, you have one here and here. And also, this other secondary fault here is called the A1 splay. And what's interesting about that is right here where that Y is, you have a bend and you also have two faults that are coming together. Why this is important is because where those bends are or pinching of the faults, it creates broken up rock that makes it so that those gold bearing fluids can then easily make their way up towards the surface. And the rock preparation is ideal for gold deposition and also where you can get dilation, where the rocks sort of open up, if you will, and you can get pooling of those gold bearing fluids. And so let me go down to this is so here is where I was pointing to earlier. And then here is the cross section. So this is like you're looking at a cake that's been cut in half. So think of cutting the earth in half, and now you're looking at it from the side. And what I see here, so this is in the Black Fox corridor. Here's that A1 fault. I would also point out that they pinch together into one down here, about 100 meters below their deepest hit. What I find quite intriguing about this is that here you can see a thin veneer of cover. So this is just like dirt and stuff like that, glacial till, things like that, that are covering up the bedrock. But as you can see here, just as they got into the bedrock with this drill hole 16, they hit 8.5 grams per ton of gold over 4 meters. Very interesting stuff. Deeper, they got 5 meters of 5 grams over 0.3 meters. Down here, it gets more interesting because here you've got 15.3 grams per ton of gold over a meter, uh, 27.5 grams per ton over a meter, and 15 grams per ton over 1.1 meter. That's another thing to bear in mind in these orogenic gold systems. These are narrow, steeply dipping quartz veins, if you will. And so you're not going to get dozens of meters or hundreds of meters of that high grade. It would sure be nice because you'd have a phenomenal mine, but that's not the nature of these kind of systems. They tend to be, 1 to 10 meters kind of thing. But what I do like to see is the continuity of the gold. Now, I also find it interesting that those hits are kind of following this A1 fault down to depth here and in fairly close proximity. So I think that this A1 fault is an important part of that gold mineralization in the orogenic gold system in the Gray Fox area, but on the Black Fox corridor of where there should be orogenic gold are open for orogenic systems. Now, I also find this interesting, this close proximity to the A1 fault. And I also find it interesting that you've got the A1 splay uh, coming into contact with the A1 fault. So I look forward to them keeping drilling deeper because most of this drilling is only down to about 400 meters. And remember, as I said earlier, that these orogenic gold systems, they can go down for thousands of meters. And in fact, in the case of Red Lake, the Red Lake mine of Goldcorp, they didn't even hit the bonanza zone until they were down 1,000 meters. So we got some nice hits here in an orogenic gold system. I'm going to scroll back up to this because not only do those structures pinch at or come together at depth, they also pinch together here near where they've made that discovery. So these are some of the points that you look for in an orogenic gold system. Now, they've got another horizon called the Gray Fox exploration horizon. And in here, it's called the Gray Fox South Zone, the 147 Northeast, Contact, Gibson, and Whiskey Jack. And there was historical resource calculated on this, where there's about 1.4 million ounces of gold. And that was done back in 2021. Since then, they've found a whole bunch more epithermal veins. And this is quite an exciting project for me. I follow epithermal veins very closely because I live in Mexico, and in Mexico, it's produced about 25% of the silver ever produced in silver mining history worldwide. And most of that production has come from these epithermal vein mines. And epithermal veins are just like in orogenic gold systems, they're steeply dipping and they come in clusters. And sometimes those clusters can be just fabulous mines. One of those is Las Chispas, that's owned by Silvercrest. And Silvercrest is they brought that project into production. It's a phenomenal money-making machine. It went into production with $100 million in debt. In about 4 or 5 quarters of full commercial production, they paid down all that debt. And in their last quarterly report, their cash is almost up to $200 million. And that's the nature of these epithermal vein mines. They can be just spectacular, and that's why they're being bought out by core mining. But what I want to show you here is, as you can see here, there's a whole cluster of epithermal veins that there's just a spectacular amount of them. And then you've got all of this widespread high-grade gold mineralization, and it's over significant widths. Like up here, you got one at 17.8 grams per ton of gold over 4 meters, 13 grams over 9.3, 4 grams over 19 meters, 10 grams over 1.9 meters. Like most of these mines in Mexico of epithermal veins are maybe 1 to 5 meters of width. Here you're getting 19 meters, 2 meters at 10 grams, almost 2 meters at 8 grams, 7 grams over 3, 50 grams over 1.3, 4 point. I mean, there's lots of them. What I'm getting at is you've got a whole cluster of epithermal veins here, and you've got widespread high-grade gold mineralization, and those veins get pretty thick, up to 20 meters, which for an epithermal vein mine or vein is very thick. Like I said, usually you're going to be looking at 1 to 5 meters. Now, I'm also going to, so notice here that there's this blue line, and what that is that's called the Gibson ramp. So it was put in many years ago, and it's very important because it's in close proximity to. So here is the Gibson lens, and here is where the Gibson ramp starts, actually, right there. And as you can see, these are all post their last resource. This one was in their past resource, but they've got about 23 veins that are new discoveries after they have done that past resource that has about 1.4 million ounces in it. What I think is very impressive is that this Gibson ramp right here gives you easy access to start chasing these nearby epithermal veins. And so here's a cross section that now you're starting to look at the side again. And as you can see here, this is the Gibson ramp. And then now instead of the other image, this image up here, we were looking from the top down. So you're looking at the top, you're looking from above it, straight down all into it in a plan section, a plan map. And you can see, okay, here's all these veins all over the place with lots of gold everywhere. All right. And here's your Gibson ramp and a bunch of veins that were found in close proximity to it. Now we're looking at a cross section, and now we're looking at the side. If you cut a cake in half and you look at the side, think of cutting the earth in half or cutting through the earth, and now you can see the side. And so here's that where that Gibson ramp starts. And look at all these veins that are in here. And this only goes down, their drilling only goes down to about 450 meters or so. But as you can see here, you got the Gibson ramp. And then now look at all the gold mineralization in these epithermal veins: 8 grams, 10 grams, 8 grams, 11 grams, 10 grams, 18 grams. uh, just lots of. So not only are you seeing widespread gold mineralization in the plan view from up top, now you're starting to see high grade. Look at this one down here, 11.2 grams uh, of gold at 5.8 meters. So you notice here that they say open. So now I'm going to, okay, so I talked to you a little bit about why I'm so excited about the orogenic gold discovery in the Black Fox Horizon, as well as the epithermal veins in the Gray Fox complex or corridor, horizon, if you will. But what really blows me away about this project is, okay, first of all, look at all these veins that are on this system. Probably close to 100, I would guess. And what that's suggestive of is a very powerful uh, uh, gold mineralizing system or source, if you will, where the gold came from that then made its way up closer to surface into all of these veins. But here is so I think what you've got here is a very powerful system, and there could be a couple of key portions or where there could be a few different sources that caused all this, or one big powerful heat engine that caused all this gold mineralization and all of these epithermal veins. But here I'm going to get into something that is a little bit rock geeky, but I'm going to show you pictures so it'll help you understand what I'm talking about. So this image right here that you're looking at, this is what's called a quartz breccia. A breccia. And what you're seeing is that you've got country rock and you've got gold or quartz. And what is so important about this is that all of the gold mineralization is in the quartz breccia of these epithermal veins. You're really not supposed to see all of that kind of gold mineralization in the quartz breccia unit of epithermal veins. All of the mines in Mexico where I live, they mine into what's below the quartz breccia in the primary quartz, or the boiling zone, it's called. And this is where you can sort of think of it like a boiling pot of water. At the top of the system is where you have all the bubbles, okay, in a boiling pot of water. And that's the quartz breccia. That's where the quartz is making its way into the country rock. And why that's important to think of, and you should always think of when you hear quartz breccia in a gold system, is that the gold itself and the silver are contained in the quartz. And so when you're in a quartz breccia, you don't get to segregate out the quartz from the country rock. When you drill a hole into that quartz breccia, you cut that core and you send it into the lab for assaying. But it's important to note that your gold is only in the quartz. It's not in the country rock. Well, some of it might be in the country rock, but let's say 90 some percent of it is in the quartz itself. But when you send that cut core, you don't get to segregate out the quartz from the country rock. And so that mixing of the quartz and the country rock into the quartz breccia, it actually dilutes the grade because you're getting gold bearing quartz and non-gold bearing country rock. And so it dilutes the grade. And so to think of these grades in the quartz breccia of these epithermal veins is very unique. It's very rare. You usually are only going to see those kind of grades when you get down into the primary quartz that's below the quartz breccia in the epithermal vein model to get those kind of grades. But they're getting it up in the quartz breccia. And there's a significant amount of it. Like I said earlier, approximately 1.4 million ounces of gold is in the resources from this Whiskey Jack, Gibson, Contact Zone, 147 Northeast, 147, and the Gray Fox South. That's what makes up those zones, make up that resource, and all of the resources in the quartz breccia, which is is very rare to see that much gold in the quartz breccia of an epithermal vein system. Like I said, in Mexico, none of the mining of all these epithermal gold and silver veins has come from the quartz breccia. It's all in the quartz that's below the quartz breccia that makes up all of these fantastic mines, including Las Chispas. So this is, as I said, your quartz breccia. And now I'm going to show you one of the great mines of the world is the Hishikari epithermal vein mine in Japan. At one time, it was one of the highest grade gold mines in the world. They were mining in some of these veins 70 grams average grade. Okay. And so, as you can see here, they're not very wide. This is maybe 4 or 5 feet, but this is so high grade that it doesn't matter if you have to bring in country rock beside it and mine, let's say, 1.5 meters, 2 meters. It makes it worth it because there's so much high grade gold in this. Sometimes these things would be over 100 grams in the Hishikari. Now, I also wanted to point something out here. You see this is called crustiform and coliform. Think of it again like that boiling pot of water. So the first boil, some of this comes in, then it cools down. And 100,000, 1 million years later, there's another boiling event. And you get more of that quartz coming up into the system. So what this is called is this is indication of a long-lived system with crustiform and coliform banding. This banding that you can see is really crucial. And some evidence that they are at McEwen Mining's cluster of epithermal veins is I read their technical report and they talk about some of the veins have just margins. So just the edge of the vein will have crustiform and coliform. It's sort of not distributed all throughout it. it's sort of just at the edge, which is quite intriguing. Sorry, I'm getting some noise here from my phone, and I'll kill that noise now. There we go. Um, and so they've got a lot of evidence from what they've drilled into at the red or at the Gray Fox cluster of epithermal veins, that they're not only are they up in the quartz breccia, but they have evidence that there should be this ideal quartz below the quartz breccia in their technical reports. And so this is sort of the spectacular stuff that you're looking for, and they're still well above it uh, in the uh, in the um, in the quartz breccia. So here is a the this is Sumitomo's website, and Sumitomo is the one that mined this. And as you can see, here is a beautiful vein, not very big. That's the nature of these things. And I'm gonna go to, there's another beautiful picture of this. There, that's the vein, and you see how they go in there and they I believe that's a drill rig that, or maybe that's underground mining. And as you can see here in the background, sorry, scrolls on me and I can't stop it. But there's the Hishikari, one of the great Hishikari veins. Okay, so now I'm going to. So remember earlier when I showed you all of those veins, this is the Hishikari main cluster right here. As you can see, just a litany. Look at all these veins that are at that cluster at Hishikari. And so this again reminds you of what we're talking about here. But again, I have to point out that when they mined these veins at Hishikari, not only were they spectacular, but they were mining in the quartz below the quartz breccia. Remember these images I showed you earlier of the actual primary quartz vein at the Hishikari mine. So again, to get so many veins and getting the high grades that they're getting in the quartz breccia unit of it is quite spectacular. And here's another image of the Ishikar, one of the spectacular veins, gold-bearing quartz veins at the Sanjin deposit. So as you can see here now, imagine if you're drilling this and you drill through something like this. Well, you may not get that excited about it. What if you drill through something like this? These are quartz veins. These are quartz veins. These are quartz veins. There's quartz veinlets all over the place. If you drill into the veinlet, you got to get into the primary quartz and up. This kind of shows you what a breccia unit can look like. You got mixing of the country rock and the quartz right in the quartz portion of the vein. And so you really have to, get to the right portion. But what makes that gray fox so spectacular is that not only are they getting they're getting the gold grades in the quartz breccia, but they also got a lot of gold there. You're talking about 1.4 million ounces of gold in the quartz breccia, and they've done a whole lot of drilling since they did that 2021 uh, that resource calculation in 2021. And so they're going to put out a updated resource in the first quarter of 2025. And so very soon they're going to talk about their new updated resource. And I'm very excited to see that because they've done a whole lot more drilling since that last resource was done. All right. So now I'm going to go to McEwen Mining's web corporate presentation. There's some good information in here, and I'll go through it. So here is their that McEwen is gold silver producer, and plus they have huge copper potential. So let's get back to the let's go back quickly to the Lassonde curve, and because I want to show you how this sort of plays out. So you see mining exploration, and here is your development. So they've got to mine, they're currently mining about 140,000 ounces of gold. And they they are a high cost producer relative to their peers, but because the price of gold has gone up so much, it has really turned around their earnings before interest, tax, depreciation, and amortization. It's actually up 500% in Q3 2024. Now, the average price of gold was even more in the fourth quarter, so I'll be looking forward to that. But they're not getting much appreciation for that. In fact, I would say that their gold is not getting them any appreciation. I think all of their valuation is currently based on their copper project that is in this feasibility. They expect to have a feasibility study out in early or in the first half of 2025. But because it's such a phenomenal uh, copper development project, it's one of the top 10 undeveloped copper projects in the world. It is also in the lowest quartile of costs for undeveloped gold projects in the world. Some of those top 10 are in permitting purgatory, and they may never get into uh, or maybe very many years into the future. Most of the others are owned by major mining companies. This is one that's in the top 10 that it's still owned by a junior mining company with a valuation that's less than $1 billion. And so it's a spectacular project. It's going to become a phenomenal mine. And in fact, when I talk later and when I go into their corporate presentation, there's some statistics in there that'll just blow you away. But they also, what I was talking about was their exploration potential. They have projects that are over here in the discovery, early discovery, and they're getting no value for that, but they've got some spectacular exploration potential and could be transformational exploration potential. So they're kind of being valued way over here for their, let's say, way over here for their gold mining and their exploration potential, and all the valuation is in the copper project over here. All right. So now I'm going to stop sharing on the Lassonde curve, and I'm going to go back to their corporate presentation because there's some great information in there. All right. So let's scroll down here. Now, this came from January 14th to 16th. So just about 4 or 5 days ago, Rob McEwen was at the Future Minerals Forum in Saudi Arabia. And this is the presentation for that. There's their cautionary statement. You can look at that at your leisure. Uh, One thing everybody always says is that you want management that's aligned with shareholders. Well, nobody's more aligned with his shareholders than Rob McEwen. He's made a $225 million investment into McEwen Mining and McEwen Copper. He owns 16% of McEwen Mining, and he only takes $1 a year in salary. McEwen has 56.3 million shares out, fully diluted. Their market cap in US dollars is about 441 million. In Canadian dollars, it's about 600 and some million, which gives it a valuation that's less than some exploration companies. As you can see here, Rob McEwen's institutional investors and retail investors that's the pie chart for McEwen Mining. Here are the top shareholders. Institution, Rob McEwen owns 8.2, Van Eck, State Street, ETF managers, BlackRock, Vanguard. So they've got a good ownership of institutions. Here they make the point of it's time to consider rotating into commodities. Now, this is a 40-year window of a chart that shows you how cheap commodities are relative to equities. So that's a comparison to the Standard and Poor's 500. And as you can see here, the the mining stocks are the commodities, and the equities are being priced at the lowest level they have in the last 40 years. Even though we got gold in a bull market, silver's in a bull, is starting to join the gold bull market, and copper has had a very good year in 2024 as well. And all these metals look to have even better years in 2025. And but yet look at the valuations of the commodities and the equities. They're being given away at pennies on the dollar. Um, Here is a looming copper supply deficit. So here is the demand going out from now, 2025. Let me hide that. 2025 and forward. And here's the supply. And as you can see, the supply is going to, over the next couple of years, be quite significantly below the demand. There's a supply crunch coming. Now, I think that this might actually understate the demand. And why I say that is a lot of these type projections were done before artificial intelligence came on the scene, and they consume a lot of energy, and to make those data centers and to energize those data centers, you're going to need a lot of copper. And how they grow, they could be exponential growth for many years into the future. And that I don't think is really represented by this demand. But let's just say this accurately represents the demand growth going over till 2035. So over the next decade, there is going to be a 10 million ton per annum copper deficit. Supply crunch is coming. And there's very little that can be done about it, because copper mines take years to get from discovery, development into production. So you can look at the supply argument and with a lot of confidence, because we know it's in the pipeline. And it's not like you can just turn on a copper mine because you need more copper. It takes many years to find them, and discoveries have been in decline for the past 20 years, which means that there's not enough projects in development. And your old projects that were found 20 to 50 years ago, they're getting long in the tooth. So we have a pretty accurate idea of what the supply looks like, and it's sort of peaking around now, and then it's going to go into decline and create this significant copper deficit. Here's a market timing. 129 years of history. Are we approaching again the time when 1 to 2 ounces of gold buys the Dow? So going back to 1896, 1 ounce of gold bought you the price of the Dow Jones Industrial Average at the time. In 1932, it took 2 ounces of gold to buy the Dow. In 1980, it got back down to 1 ounce. Currently, it's sitting at 16 ounces to buy the Dow. So I think the Dow Jones, the S&P 500 are overvalued. And I think that the gold is undervalued and gold is going to start to play catch up. And that's the point they're trying to make in this slide. Uh, Here's some oversized returns that you can see during bull markets, where you get these phenomenal runs in the price. Here's a little bit about Rob McEwen's history. He bought 1/3 of US gold in August of 2005, merged it with Minera Andes to establish McEwen Mining. Look at what happened when he did that. It went up 18 times, came back down around the great financial crisis, and then blasted off again. Came back down, blasted off again. This is when I started to follow the company doing interviews with Rob McEwen. At the time, the stock was trading at about $4 post consolidation of the shares. All of this represents the post consolidation. They did a consolidation of their shares in 2022. In the third quarter of 2022, I started following the company. They've done very well since then. And I argue that most of this move is all based on the copper, the Los Azules copper project. Outperformance driven by copper, essential to modern civilization. So again, operation strategy, a recovery of gold and silver, time-tested wealth preservation. So they're making the argument of why you look for copper or gold and silver. But this is back to that 2022 September period. And as you can see here, McEwen Mining stock has done very well. It's significantly outperformed silver, the NASDAQ, the GDXJ, gold itself, the GDX. These are funds that track gold miners and gold juniors, the Dow Jones Industrial Average, and copper. So you can see it's significantly outperforming. Again, I think that that is mostly based on the gold, or the copper project, and doesn't give them much credit for the gold mining. That's now that gold is in a bull market, is doing great things for their bottom line, or the exploration potential, which I think could be transformational. Um, Here is an evaluation that they've done where they take a range of estimates for their current assets, and they've got a low, mid, high, and it includes their McEwen Mining Copper, which they own 46.4% of the private company, McEwen Copper, and then they own the gold and silver mines and exploration. And so giving that $8.64, these are in US dollars, and $5.43. On the low end, the estimate is that the stock should be trading around $14.72. It's currently trading at around just above $12 Canadian, and that's $14 US. Or here it's closed at $8.34 US. So making the argument that it's significantly undervalued at the low estimate. At the mid estimate, which is taking into consideration the valuation that Jose Maria got inside of Lundin Mining that bought out Filo recently. And so based on that valuation, you're looking at, quite significantly undervalued. Now, this valuation uses the takeover price comparison to Filo del Sol, which was owned by Filo and bought out by BHP and Lundin for 4.8 billion, $4.5 billion Canadian, or $3.12 billion US. Now, why that's a fair comparison is if you look at the size of Filo del Sol, Los Azules that McEwen Copper owns is bigger, it's higher grade, it's lower cost, and it's about 3,000 meters closer to sea level. At Philo's project, it's at Base Camp Everest. So when you get up that high into the mountains in the Andes, it starts to affect oxygen, which affects workers, equipment, everything like this. And so I would make the argument that Los Azules is a better project, and that gives them $46 valuation. So they're making the case here that they think that they're quite significantly undervalued. Los Azules, it's in a great part. Here's some of the great mines in Chile, Escondida. Lindero is over here in Argentina. Taca is in Chile. Glencore's Mara is here. And then there's this emerging area here called the Vicuña district. And that's where the Filo del Sol is. And then down here is Altar. This was a great pick of mine in the past. I picked this company when it was owned, or picked this project when it was owned by a junior, and they got bought out, and now South 32 owns it. But here's the Los Azules project. San Juan is the most mining friendly jurisdiction in Argentina, and Malay has opened up his arms to mining, sees it as a important part of the economic turnaround of the country. As you can see, here's Jose Maria and Filo del Sol. This has been done now. It's no longer pending. They're up in the northern part of the San Juan province. McEwen is down here. There's a whole belt of, here you got Escondida, Lindero, Veladora, Las Palambras, Andina, Los Broncos. And these copper belts, they don't care about borders. Chile does a phenomenal job. Escondida is a monster, but it's getting long in the tooth. But this is the next emerging copper district in South America, in Argentina. Great jurisdiction to be in. Uh, this shows you the Los Azules 2023 PEA mineral resource. 26 million pounds contained copper equivalent in the inferred, 11 billion pounds of copper equivalent in the um, in the indicated. Here is your Los Azules, and here's your top 10 copper development projects. It comes in at number 8. And bear in mind that this only contemplates about 40 or 50% of the resource that makes for their preliminary economic assessment statistics. But look at a couple of these, Pebble and Resolution, they're in permitting purgatory. So your top two of the world's top 10 undeveloped copper mines could be a long way into the future. Then you look at who owns these. Lagrange's is owned by Rio Tinto. KSM is still a long way from permitting. It's owned by Seabridge, so that's a junior. Nuevo Union in Chile, that's Teck Resources and Newmont, so majors. Glencore owns El Pachon, Antofagasta, and then a Chinese company. And so, like I said, a couple of these are in permitting purgatory, and a bunch of them are owned by majors. And then you've got McEwen Copper, the private company that's owned 46% by McEwen Mining. Um, Here is some valuations. Here's McEwen Copper. This is an impressive pie chart. So McEwen Copper is privately held. McEwen Mining owns 46.4% of it. Rob McEwen owns 12.7% of it. Newton Rio Tinto owns 17.2% of it. Rio Tinto's Newton Ventures has put $100 million into McEwen Copper, which makes it their largest investment. Newton is a venture of Rio Tinto, and they're trying to revolutionize the extraction of copper to make it more environmentally friendly. And they are studying how this could apply to Los Azules. And so I think it's pretty impressive that they've put $100 million into it and own 17.92%. But here, Stellantis, world's fourth largest automaker, owns 18.3%. And they make cars down in Argentina, and they know that they're going to need copper. And so having a source in Argentina that will produce copper cathode that could be used immediately into their cars is pretty important. And that's why they own a big chunk of the company. So here they talk about reasons why McEwen Copper's future IPO. Okay, so now this brings up an interesting topic to me. Part of the reason why I think that McEwen Mining is undervalued just for their, oh, sorry, my dog wants to get into the show. Happy. Why I think that Happy, sorry about that. Just give me a moment here. Happy, happy. So why I think that McEwen Mining is not getting fair value, happy, for their sorry for the dog interruption there. Just at the point when I was going to talk about some important stuff. Why I think that McEwen Mining is not getting fair valuation for their copper and next to nothing for their gold mining and their gold exploration potential comes down to what you call price discovery. If McEwen Mine Copper was a publicly traded company, people could easily go and say, well, they own 46.4% of that, and this is worth that. So the McEwen Mining should be worth 46.4% just for the copper alone. And then you would have price discovery on McEwen Copper, which would make it, if you go public on the New York Stock Exchange, there's not a lot of copper development companies on there. So if investors in the United States are interested in investing into a copper development project, they don't have very many companies to pick from. And because of the great metrics on this, it could be quite an attractive, well, I think it's a great thing to do for price discovery of what McEwen Copper is really worth. I don't think it's being valued fairly. for the quality of that project. And so they plan to take the company, do an IPO in 2025. And what they want to do is that they're going to do the 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 re the sorry the feasibility study. Sorry, I had a tongue twister there. They're going to do the feasibility study and get the permit that they're waiting on, and then take it public. And they think they're going to get all of that done in the first half of 2025. So I think that this is a very important part of the whole story of McEwen Mining and McEwen Copper for that matter. Lots of other great information. Here's the pit shell. They're getting great results. They're finding new discoveries. And you can, I advise you, I got this from their website. So go on their website and you'll find that corporate presentation. So in a nutshell, I think that McEwen Mining has a lot of catalysts to unlock value. On the copper side of for McEwen Copper, that would be the feasibility study that they're working on and the going public process on the New York Stock Exchange, which would help to get um, uh, price discovery for the quality of the Los Azules copper mine development project owned by McEwen Copper, which is 46.4% owned by McEwen Mining. The other thing that I think is that they're not getting a lot of credit for their the turnaround to the bottom line of their gold mining operations. So that's another potential catalyst. And they're getting not anybody's really paying attention to the transformational potential of their gold exploration projects at the Black Fox complex that I talked about quite extensively earlier. And so again, I these insights into drilling series is kind of giving you what I look for to help understand the valuations and how I determine or look for value that's not being recognized. Now, of course, this is my opinion. I'm base my opinion on 30 years of experience in the mining business, but this is show is not a my shows aren't to make buying or selling recommendations. They're purely for information purposes only. Before you make any investment decision, you have to do your own homework, speak with your financial advisors, and that homework and that speaking to financial advisors is very important. I'm just giving you some insights into drilling that are what impress me based on my experience. You have to do that homework before you make any investment decisions. On that note, have a great day. Look forward to more of these insights into drilling, like we did with McEwen Mining today.